27 days into a new year, but the major challenges we face remain those of last year. In 2008, thousands of St. Louis area homeowners prevented foreclosure on their houses with help from trusted community agencies that partnered with Channel 9. But still, foreclosures continue, and the nation's mortgage crisis has evolved into a financial crisis. So grab a pen and paper. In a moment, we'll give you a phone number to connect you with a team of housing, credit, and mental health counselors ready to assist you with the issues you face in these tough economic times. Good evening, I'm Ruth Ezell. For the next hour in a special live broadcast, you'll be hearing from a panel of people on the front lines of the fight to turn the tide of foreclosure, reduce personal debt, and stabilize area neighborhoods. In the second half of the program, panelists will take questions from concerned citizens in our studio audience. They will also take your questions by phone and email. You can either call us at 1-800-568-9099 or email your questions to financialcrisis@ketc.org. The telephones are being answered tonight by housing, credit, and mental health counselors from several different organizations. So if you're facing possible foreclosure of your home or repossession of your car, if you're burdened with high balances on your credit cards, and if the stress is more than you can take, call 1-800-568-9099 right now and talk to one of our counselors. And if you want information about available counseling, call the United Way 211 service at 1-800-427-4626. Now, you'll notice in our studio tonight a few people with laptop computers. One of them is taking your email questions. The other is providing a running account of tonight's show through Twitter. This program is also being streamed on our website, ketc.org. Since last July, when Channel 9 broadcast the Facing the Mortgage Crisis specials, America was officially declared in recession, one of the worst in decades. The fallout is all around us, including the most recent jobless figures released this morning by the Labor Department. In December, the unemployment rate rose to 7.2% nationwide and 7.3% in Missouri. The foreclosure picture isn't pretty either. According to RealtyTrack's 2008 U.S. foreclosure market report, the number of U.S. properties named in foreclosure filings last year totaled more than 2.3 million. That's an increase of 81% from the previous year and 225% higher than in 2006. In Missouri, the number of properties with foreclosure filings last year was more than 31,000. Up 33% from 2007 and up 139% from 2006. What began as a crisis with subprime mortgages, home loans to consumers with less than sterling credit, now touches all credit markets.
It's not just mortgage debt or the first lien mortgage. It's the fact that more homeowners than ever before have second or even third mortgages that add to the repayment burden. Also, of course, there are other types of consumer borrowing like automobile loans or credit card loans or student loans.
Every time I go to use a credit card now, I'm just going to remember I'm borrowing money at possibly 28%. Do I want to do that?
It was credit card debt that started Stacey Haynes' problems. She owed about $20,000 on purchases to make upgrades and unexpected repairs to the Richmond Heights home she bought in 1999. But the loss of her job as a medical practice consultant eventually made it impossible to stay on top of either her credit card bills or her mortgage. Haynes lost her home to foreclosure last October, filed for bankruptcy, and now lives with her daughter.
I never thought in my life that I would be filing bankruptcy. But I had already lost so much. When I bought the house, I put $20,000 down. So in my mind, I had a good $100,000 in equity in that house before this housing crunch thing happened.
The commercial sector has also been hit. For example, the Renaissance Grand Hotel and Suites in downtown St. Louis is scheduled to be auctioned off next week. Its owners defaulted on bond payments. In Richmond Heights, the planned opening of Nordstrom is being delayed by 1 year due to the economy, while the owners of the Galleria got an extension on repayment of $900 million in loans to its creditors. And as property values decline in the wake of the burst housing bubble, the drop in property tax revenue will at some point be felt in school districts. The superintendent of the Rockwood School District is prepared to make budget adjustments, but at this point, he's more concerned with the emotional well-being of students.
One of the things that we've been talking to our building principals about and getting information from is, what's the impact of the recession on the students and on your parents? And that's really much more immediate and much more dramatic. Stories of kids that come to school having discovered that mom or dad lost their job, sometimes both earners in a family losing their job. I mean, dramatic impacts. Those are the things that we're really dealing with.
And all of that just scratches the surface. We have a lot to talk about, so let me introduce our panel. Chris Krehmeyer, Chief Executive Officer of Beyond Housing. Eric Madkins, Director of Housing and Foreclosure Intervention with the Urban League of Metropolitan St. Louis. Jackie Tammenga, Area Director of Clearpoint Financial Solutions. And Todd Swanstrom, a professor with the Public Policy Research Center of the University of Missouri St. Louis. Welcome. Thank you so much for being on the panel tonight. The first thing I'd like to ask you is some news that it was just released a couple of hours ago from the Federal Reserve. They're launching a new program, has to do with mortgages that it holds. And apparently borrowers, if their mortgages are in trouble and they can prove that they can continue to make payments, if the terms are changed, then the terms can be changed, that holders of these mortgages can do that. It sounds like good news on the surface. What do you think so far, or what you've seen?
Again, there's been a series of programs that have come up with a lot of pomp and circumstance, but not a lot of results. So hopefully they've thought this through a little bit more and has greater reach and greater scale. On the surface, again, when we read the press release, it appears that there might have some legs and might really get dollars and resources down to those people who are in jeopardy of losing their home and really make a difference. So we'll keep our fingers crossed and hope as the details come out, we'll be able to get prepared and see if we can keep as many folks here in St. Louis in their homes. Okay.
Well, Todd, you certainly follow everything that's happening in Washington. So what do you think?
Well, there's no doubt that it's good news if the devil's in the details, as Chris said earlier. The key here is this is going to be government-owned securities. A lot of these mortgages are in these pools, and they're very hard to change. But the hope is that the federal government can step in, purchase pools of mortgages, and then be in the position to modify them. And the key is preventing people from losing their homes, because that prevents a lot of other collateral damage down the line. So I'm hopeful, but we got to wait and see. We haven't seen it yet from the feds yet. We haven't seen the kind of action that's needed. So let's hope this is a sign that it's going to finally happen, and we'll start being on the street as quick as possible.
Okay. Well, Chris and Eric, you were with me last July when we did the Facing the Mortgage Crisis specials. Did you see an uptick in calls after those shows?
Absolutely. Since the airing of that program, we've seen, a drastic uptick in actual clients that we are seeing at our agency and whatnot. So, but really just to be able to adhere to the situation, we beefed up staff as far as being able to accommodate the community as far as homeowners who may be facing foreclosure or may be facing default. But the most important thing that I always tell the public all the time is just they have to be proactive. If they see themselves facing foreclosure, or even if it's a situation where they may have just lost a job or whatnot, they need to take those proactive steps and contact Urban League, Beyond Housing, Catholic Commission on Housing. They have to be proactive when they're facing that crisis.
And I would imagine the advice is still the same. We've been telling people, open your mail, call your lender. Is that the same advice you're giving out?
Be proactive. Fight for your home. Again, we know it's stressful and it's hard, and now when we add the job losses that are happening here in the region, that exacerbates an already bad situation. But fight for your home. Get a plan together. Take a deep breath. Reach out and talk to somebody who can help you through it. There are organizations like Beyond Housing and the Urban League and others who are here to help you, and that's our task. That's our job. But you have to reach out. You have to be proactive. And again, fight for your home. Don't put your head in the sand and think maybe one day something magical will happen. It won't. You have to fight for your home.
Thanks. The flood of mortgage defaults and foreclosures across America sparked a near meltdown of the nation's banking system and a subsequent tightening of credit markets. Anne-Marie Berger has spent more than a year tracking the progress, or lack thereof, of a business venture that's feeling the credit pinch.
In September 2007, Paul Buzetta's biggest challenge was turning this building into the perfect Sicilian restaurant.
The second floor is going to be the open dining room.
And it was a big challenge. At one point, a tree was growing up from the basement. There were no walls to speak of. And while tearing it down and starting over would have been easier and cheaper, this 150-year-old building is in the historic Lafayette Square neighborhood, so it must be restored, not demolished. So brick by brick, Buzetta spent months transforming it into what he hoped would be his family's latest restaurant.
The whole time we've owned restaurants, it's always been about, family and bringing, everything is kind of by heart. So this is kind of like we're pouring our heart into this place, and it's going to be ours, and we can always say, this was nothing, and now this is what we brought it to be.
When we talked to Paul Buzetta in September, the building was beginning to take shape, and he was optimistic they'd have the restaurant open by Christmas. Well, today is December 4th, and Christmas is just 21 days away.
We're now hoping for sometime in January.
Sometime in January.
Yeah.
Okay.
So a little frustrated with the pace, but I guess, that's construction. I don't really have control, so.
Now, when he said January, he was talking about January a year ago, 2008, and there were continued delays.
So now we're shooting for Valentine's Day?
Yeah, we're shooting for Valentine's Day.
But as the building progressed, so did the banking crisis. The closer Buzetta got to opening his restaurant, the less money banks had to lend out. And just like the construction, he has no control over that.
Yeah, they said we're no longer doing this program that, I had fit in, and the program had been discontinued, and that money wasn't available anymore.
But Buzetta quickly found out it wasn't just the bank he was working with. Every bank he approached said the same thing. They weren't lending any money.
I've just run into a lot of roadblocks with different banks around town that are just not willing to do what they used to do, and put a lot of faith in people's experience and things of that nature.
When Buzetta began this project almost a year and a half ago, he thought his biggest challenge was the building itself. It's now January 2009, and due to no fault of his own, Paolo's, that's the name of his restaurant after his son, still has not opened. But Buzetta overcame the obstacle of rebuilding this building, and he believes Paolo's will beat the financial crisis as well.
Do you have another plan?
That's what we're working on right now, hoping that the election of Obama is going to allow some of the money that's been out there that the banks have. He stimulates the banks to start lending that money out again. And I'm working with a bank right now, and they're pretty positive. I'm not getting my hopes up because I've gone through this a couple times, but I'm going to keep pushing until the bank actually kicks me out. Until they say we don't want to see you anymore. We've told you no. So no one's told me that yet.